join, even though I've known Paul and Chloe since the beginning. I'm one of the newest people to join Actions to Wealth, and if I met you in Bali, I'm going to give you a shout out. So very nice to see you all in Bali, even though I apologize, I was sick. Very nice to see all of you, and welcome back. Thank you for joining me today. So I'm probably going to run over a little. I will try and keep this quick. I want to focus on where the opportunities are. I want to do a general market analysis, and then throw in a little bit of some mentoring tips as well. So hopefully 30 to 40 minutes max if we do that. If that suits you, if that's okay. I can go forever. So I'm just going to try and keep it down to say 30, 40 minutes max. All right. So the first thing I want to do here is let's get the fundamental stuff out the way. So I'm just going to check out what is on the economic calendar. Here we go. Just grabbing that. Okay, let's have a look. So for the current week, we have got, don't worry about the times will be based on my times here in the UK, but we've got some dollar news, not too worried about it. The US economy is doing incredibly well, no problems there. We've got CPI data coming out for the UK and Europe, which is fine. That doesn't impact you guys necessarily, but that would be interesting to see what's happening, because when we look at the US is experiencing the best growth out of the G7 to G9. And so the question will be is how is that compared to the pound or the euro? Because obviously next to the US dollar, the euro is the next biggest currency that can move the US dollar. Then we have crude oil, not concerned about that. It's not a thing now. So yes, in the past, maybe crude oil inventories were a thing. They're not a thing anymore. We are definitely starting to rely less upon crude oil as an energy source than we ever have in history before. There's also a surplus of it. We're not as dependent on Russia post obviously the invasion of Ukraine. So in other words, as a global kind of chess piece that could be maneuvered and manipulated, we're not as sensitive to it as we have been in the past. Not saying we're free of it yet, but we're not as sensitive to it now as we used to be. So that doesn't really, I would almost say it's almost less of a fundamental influence than anything else. You probably look more at the dollar price and then just analyze the chart or the dollar's behavior. Then we've got the interest rate decision. So this could really potentially impact what happens with the euro, but there's no expected change. All right, and then jobless claims in the US. You know, not really expecting too much from that at this point. Okay, now, so in other words, not really expecting much news, nothing from the news coming this week that could really be a game changer. We're not in any state of despair or like agitation or any reason why the markets would be sensitive to any of that kind of information. So we're living in a bull market. To be clear, we're living in a bull market right now. Which most people haven't experienced. The last one we had was from kind of, I guess, 2010 until sort of 2021, which didn't really feel like it. It feels like since 2016, the world has just been on fire, which in some small cases it kind of is. And the last really glorious bull market was from like 2000 until 2007. Okay, so we are living in that stage right now. Okay, so what are we looking for? We're looking to identify the strongest trends to know which markets to be focusing on. And we also want to make sure that we know which charts we should absolutely stay away from. Okay, so we should be very, very careful about certain markets. The only thing I want to mention that's in front of me right now is mention that the S&P printed a double top. So this is the S&P 4 hour, and this printed a double top so far. We've got some bearish divergence on the MACD. And we've got this rejection here. So we might actually find that post, sorry, let me get rid of this. What's going on here? You're not supposed to be there. We might find that next week we see a little bit of a correction down into this area. Okay, so if we get this bearish divergence, equal top with bearish divergence like that, that can usually be an indication of either a consolidation or a bit of a correction. So what I do then is immediately go up to the higher time frames to see if we are overextended, because then it makes sense. If we're getting a bit of bearish divergence at a key price level, then what could be happening is we could be overextended and the market is looking to have just a correction. Okay, so let me just clear all of those things. Let's bring up my annotation thing. I suppose you can all see and hear me, no problems, all good. Okay, good. Okay, so first thing I do, go straight up to the daily. Daily is not too overextended, but it might be wanting to just connect to the moving averages like it does here and go up. The weekly is a little bit overextended, but it can run for very long periods of time. I think we'll sort of come back to that. We're going to run through, let's just do a broad run through the currencies quickly. So first of all, let's go through and have a look at euro dollar. What I'm going to do here is I'm going to do two things to make this fun. I am going to use a very plain, straightforward, give me a second here, plain, straightforward chart. So we're looking, what I would like you to get out of the session is increase your exposure to pure price action and not just other indicators. So I'm going to keep it really straightforward. So we're going to use simply support resistance levels here, maybe fib levels and the MACD and price, horizontal levels, just that kind of stuff. We'll throw it in. And then what I'm going to do is match that. So then what we'll have next to that will be the wave rider. So let's do the wave rider over here with the channel. So we'll keep this on this side. Okay, and we'll compare the two. Oof. Just I need to clean up a few charts here. So the more charts you have with the more indicators on them, and the more instruments that you have listed in the navigator window or in the market watch, the more it's going to weigh down your MT4. Okay, the more it's going to do that. So you ideally want as few charts as possible, and you remove all the stuff that you know you're never going to trade with. Okay, so what are we going to do here? We'll compare the two. So first of all, let's do some analysis. All right, so I like to do some very straightforward kind of analysis here, looking at this broadly on the daily. You could see that I'm going to bring in a downward sloping trend line. So you can see there's one over there. We actually had a little, sort of a closer one, a little bit of something kind of going on over here. We've broken through that, but this is the big one. We've also got another one over here that's kind of effectively forming this. So we've got this. It's rare. This is rare to see a triangle forming like this, which is basically an inflection point. Where is it getting to? So if we look somewhere at the end here, where does this match up with? This kind of matches up with the US election. So we're kind of in this area, we start to get to November. So let me move this to November the 8th. Sorry, so 2024, 10th, 11th is around about, this is it. This is the US election. So actually it looks like it's building up possibly to a bit of a kind of a collision course with the US election. Interesting, hey? I'm not saying it is, I'm saying it just appears to be. So let's forget about this part here, but that is, sorry about that. Appears to be somewhere around here. We're gonna see this inflection point anywhere in there. Could break up before that, but it kind of seems like it wants that this is possibly what's gonna happen. From a fundamental perspective, that makes sense. The US election is the biggest election in our lifetimes, certainly since World War II. Why is that? Well, the US economy is the biggest in the world. It's bigger than the next 8 or 9 GDPs combined. California as a state alone. I have this, I kept this somewhere. California as a state. Oh, California as a state has the same GDP as Japan. Like, that's absolutely insane. Okay, so just absolutely huge, which means that, you know, the whole world is watching it because it doesn't just impact currencies, it impacts gold, it impacts crude oil, it impacts everything, the global economy. So let's just kind of keep in mind that that is definitely a factor. And as we go towards it, there is going to be insane escalations in the US. There is a massive civil war brewing. And believe it or not, it's not two different groups of bad people battling it out. It is literally pro-democracy versus pro-authoritarian. So it's basically Nazis versus non-Nazis. And Nazis are going to escalate this issue. They've worked out that if they don't win this election, somehow, by hook or by crook, by attempting to overthrow the violence or assassinate their opponents or do all kinds of crazy stuff, they realize that they're not going to be able to recover for many years after that, because there will be laws that will be changed, and they've revealed who they are now. So they'll be expelled from Congress and all these various things that will happen. So there's a lot of tension. So I'm warning you, I'm saying to you, there's going to be a massive escalation of insane things that happen between now and November. It's going to be crazy. Lots of domestic violence, lots of threats, lots of crazy misinformation, disinformation. It is going to be madness. If you are not on Twitter, that's a good thing. Stay off Twitter. Stay far away from it if you can. You're not going to get the truth on Twitter. And stay away from mainstream news. Find your trusted news sources and stay on top of this. Okay, but from a technical perspective, we have a wedge forming with price. We want to be aware of that. So if we go look at Euro Daily on the Wave Rider, we do have an upward sloping channel. We are above the weekly pivot. We're a little bit overextended. We're near the top of the channel. Very good. So great question has come through now saying, Adam, obviously most of you can read the question. I'm just going to read it out loud for those who are listening. Adam, would we expect any knee-jerk volatility reaction to ex-President Trump's assassination attempt? There's a lot of, that's a great question. He's not going to gain any voters. So the voting is already baked in. So people already know why they're not voting for him. They're not going to change their minds. People already know why they're voting for Biden. They're not going to change that. People who like Trump are definitely going to not change their minds about him. It's baked in already. Like, in other words, it's got so extreme now that people have just made their decision already now. So it's not going to change the number of voters at all. What it is, there's a lot of rumors going around, obviously, and misinformation. A lot of people thinking this is trying to create sympathy for him, and also he did a photo shoot afterwards. He wasn't even removed from the scene. He stayed there, did a photo shoot. It was very odd. It was kind of like, was this constructed in order to justify violence against Biden's people? Because most of the violence to now, in fact, all of the violence up to date has been purely coming from the right-hand side. They're pro-guns, they're pro-violence. The attacks on Nancy Pelosi's husband, all the stuff has been coming from the right-hand side. And so what they often, and they did this with Hitler as well, they want to justify retribution against the Jews, for example. So then they fake or they have actual assassination attempts by people, and they do it. But this was a Republican. This was somebody who voted for Republicans in the 2022. So it was one of his own people that attempted to do this. There's going to be a lot of misinformation going around, but they've identified who it is. So knee-jerk volatility, I would expect a justification from the violent people to justify retribution. That's what I would expect, but it's not going to change the voting. The voting is baked in. Biden, on pure numbers alone, on pure sanity, Biden is going to win, which is partly why I think the right is escalating everything they can, because they already have worked out now that the one side is going to win. They've already worked it out. And also all the Epstein files, I know we shouldn't talk about this very much now, but all the Epstein files came out, and suddenly, while the Epstein files are absolutely everywhere, suddenly there's just nothing else. The mainstream media is only talking about assassination attempts and Biden's debate performance, and nothing about all of the Epstein data that has come out. And it is interesting. The timing is interesting. So anyway, I'll leave you with that, but let's just see how it goes. But expect more of this. This is just the beginning of absolute excuse my language, ladies, batshit craziness. It just is going to escalate. It's going to be crazy stuff. And it's going to drive us all nuts. It's going to drive us all nuts. The best thing you can do, kind of keep a distance, keep an eye on it, but from a distance. In terms of the markets, no, I don't expect that. I think we've already got that uncertainty built in, and it's working its way towards that. So I think the markets are just going to calm down and basically tread water until we get some certainty as to what happens. Okay. Right. So we've got this. So basically, according to the shorter term, we've got that channel which is offering us buy opportunities, but we would need a pullback. It's a little bit overextended. It's near the channel. I would wait for a pullback. Right. Let's go and have a look at the others, guys, because otherwise I'm going to be talking about this forever. So here again on sterling, we've got a bit of we've got that channel happening. We've broken through it. So we don't really, let me just zoom out and see if there's anything else. I mean, I think we've effectively broken through this to the upside. There was one kind of here. We appear to have broken through it. This is the pound getting stronger. The pound is very, very strong at the moment. So what does that mean? It means that if I was going to be looking at a major to trade, especially with the Wave Rider, it's definitely the pound. Okay, absolutely, the pound is on my watch list. Will we get an entry opportunity this week? We'll have to wait and see. Sorry, waiting for it to update. One of the things that I want for you guys is to learn, over time you will anyway, but to learn how much the things we used to think impacted the markets and how little they really do. And sometimes we'll realize, okay, this time around something is impacting the markets. But the media tries to create the impression that everything you hear in the news is the stuff that impacts the markets. And it isn't really the case most of the time. Most of the time, the markets continue to do what they're doing. If you're a hedge fund and you've got 50 billion under management, you're not going to be getting in and out of trades every day. It's insane. You're just not going to be doing that. Maybe a portion of your budget will be doing that. A lot of the stuff, you're looking for stability and long-term commitments. You're looking for 6-month to 5-year commitments. When you're doing ETFs, they're not changing out the constituents all the time. So the bigger the investment firms get, the longer term they actually don't want to be chopping and changing things all the time. Day traders tend to take advantage of shorter term stuff, but day traders only make up a portion of that. Now, again, Julian, if any of you are lucky enough to hear him speak, he really knows the stuff. Like he was talking about the bond market. And again, the bond market is people buying homes that they're going to pay off over 20, 30 years. So bond markets also have a longer term outlook. So the media has tried to kind of give us this impression that everything you hear every day will change the market all the time. And it just doesn't. The market is incapable of doing that. And it's too big to be influenced by that. So most people who are who are in this game become conservative, and they want whatever is happening in the markets to kind of be, to stay there for longer rather than it to be chaos every day. It's just nobody wants chaos every day. So look at this. It's a great chart, but you want those opportunities, but you might have to go down to the lower time frame. So you're looking maybe at the 4 hour is a good one. You're looking for those pullbacks. Again, guys, the period. So if we go look at the other chart, what is our moving average over here? This is let me just go through to the indicators list. It depends on it because I use this one. So that one is a 10 moving average. So let's put a 10 and a 20 on the chart. So I'm just going to insert the 10 and the 20. So this is when we have a trend. We throw in the moving average. So I'm going to throw in a 10, which you can see price pulling back to it here. And I'm going to insert a 20 just to throw this in as well to give you, sorry, I get distracted. There we go, 20, and give you this nice blue one so we can see what it's doing. Okay, so that can be very good. You go to the 1 hour, you can see the pullbacks into the moving averages, and going. So if you're trading the lower time frames, the trend is really strong. The pound is very strong. We'll see this when we compare it to pound yen, pound Swissy, and so on. So to me, the pound sits absolutely on my watch list. It is due for a daily pullback, but if we don't get the daily pullback this week, it is due for intraday setups. Okay. Strong and long. By that I just mean going long. Okay, buying. I've never said that before. I said it now. Okay, let's look at Aussie dollar, US dollar. Aussie dollar, US dollar also breaking up, guys. So we're breaking to the upside here. We've got a low. So you can see here we were in a bit of a downtrend. We've broken, there was a major level of resistance in this area. We broke through it. We've also got a little bit of resistance here, but we're basically now operating at highs. We're looking nice and strong. Yes. Fantastic. So again, I'm loving the contributions, by the way. So the next comment here is pound yen keeps going up in spite of all the all-time highs and risk of Bank of Japan intervention. Is it a high positive swap factor, and do I see it going higher? So it's a strong trend, which is why the markets want to stay in that. Also, okay, so let's talk about that, because this is a very good topic, and this is something you're going to experience not very often, but every few years there's going to be either Switzerland or Bank of Japan or someone is going to want to intervene, possibly if their currencies run amok. The main relationship that Japan cares about is dollar yen, because that's their biggest trade partner. So they tend to, they're an export country, they tend to want to match their economy and kind of tie it to the dollar's performance and the dollar economy. So they tend to do that. So that's really the one where they want to intervene. That's kind of, let's just quickly have a look at them. And their line in the sand was 150. It was over here. So now we're sitting at 160. They're probably pushing back a bit. So they've got a couple of things they can do. They can start changing policies. They could start to try to motivate export partners and stuff to change rates and so on and so forth. So there might be a way to curb it. But if that doesn't happen and it's getting more and more out of control, they want to intervene. They start threatening to intervene first. So threatening to intervene first can sometimes give them the desired effect. And then sometimes they have a bit of budget to buy in, so they can start buying back in as well to strengthen it. They can change the interest rates. There's lots of things they can do before they really get to a very expensive and costly actual intervention. They want to do this, guys. It's their focus really on dollar yen that does that, but it will impact all of the yen pairs. But here's the answer to the question. It could take them 3 months to get this turned around. It could take them a year. Eventually they'll get to a point where they just start escalating it, or they intervene. And usually they will threaten to intervene and tell you they're going to intervene and tell you they're going to intervene. They'll give you lots of warnings, and then they'll just intervene without warning you. And then they'll just intervene without warning you, meaning we told you we we're going to do it, we told you we we're going to do it, now we're going to do it, which then shocks the market and like, okay, this is a problem. And then if that turns around, fine. Otherwise, they'll then do the same thing again. And so usually you get the market starts to match onto that. So here's the reality. The trend is still in place. The trend is still there. But now there's a known risk, or at least a known unknown and a known risk, where we know that they want to turn this around eventually, but it could. The problem is we don't know if it's going to happen in the next 3 months or the next year. So what are our choices? Our choices are probably to continue trading. So hear me out, guys. The risk is there. There is a danger now. How can we mitigate that? How can we contain that danger? We have multiple choices. Don't trade any of the yen pairs at all until it's resolved, but there could be trading opportunities going for months where you don't get them. That's true. So both are valid. Don't trade it or trade it, but accept the risk. So on the two ends of the spectrum, trade it, accept that there could be an intervention and there could be slippage, and you could have a 2% loss instead of 1%. It could happen if there's a slippage when it happens. These days, the technology is better. The chances of a big or bad or damaging slippage is not gone, but it's probably not the danger it was the last time that they intervened. So you'll probably get your stop losses set. You absolutely would make sure you have your stop loss in place. You would possibly not take trades on 5 or 6 yen pairs if you get wave rider setups. You probably would pick 1 or 2. And then also you would make sure you have a stop loss, and maybe instead of risking 1 or 2%, you would risk 0.5%. That's your entire risk management menu of choices that you have. You need to make the decision. You could, for example, make 6 or 10% in the coming months on those yen pairs and then lose 2% when they intervene, or 4%, and you're still net up. So this is a great exercise for your entire trading future going forwards. Think about it, come up with a plan, research what happened with slippage in the past, with trading interventions, and look into that stuff. And then based on that, make a plan around it. If you feel that you can still, and this is what a trade is, probabilities wise, still make money until or even if an intervention occurs, there's your answer. This is a really great lesson. You could almost just do a webinar just on that topic. Does that make sense, guys? Give me some feedback. Let me know if I'm helping out, if this is making sense. Okay, so Aussie dollar. So to go back to this, I like pound dollar for wave rider. I like Aussie dollar for wave rider. Okay, just understand that as we get closer to November, especially around September, you may want to actually, same thing, you may want to start reducing your risk on dollar pairs on the majors possibly. Okay, I'm waiting for this to just load up, sorry. I actually have a wave rider chart. I'm going to go get it. So one of these is already a wave rider, not that one. Those are my trading charts. I got trades on those. I got trades on Swissy pairs. This is the wave rider. Sorry, there we go. So let's move that over here. Let's get rid of, or let's just get rid of that one. No, yep. Get rid of this one. Let's use this one. I'm just going to hide the black pivot or change it. It just is a bit distracting for me. That was this one. Just going to change it up. It's black. I'm going to make it thinner. And I'm going to just change it to something like that. So it's just there, but it's just very light. Okay, so Aussie dollar, nice, I like it. So yes, near the top, but any pullbacks this week would be opportunities, wave rider setups. So I'll tell you what I'll do. I'm going to create the list and then just drop it in at the end so you have that one thing. So we'll just do GBP USD, AUD USD. Kiwi will be similar, but let's have a look. Okay. Yeah, I mean, again, I would channels here, wait for it to go green. So I'm going to say the NZD USD, which actually this week could maybe even be euro dollar. Let's have a look at that one more. Yeah, you just need to pull back on that. So all of those look good. Okay, dollar Swissy, a little bit trickier here. So I'm not that happy with dollar Swissy. Let's go with dollar CAD. Dollar CAD's a mess. So let's go have a look at dollar CAD. It's a complete mess. Dollar CAD is sideways. It's garbage, as I always say. Just stuck within this. It is producing a series of lower highs. It is producing that, so it's actually forming a wedge against a level here. It's also trending lower, so the MACD is bearish. So what it's likely to do is to break out and go south. But I would wait for the breakout. I'd wait for it. It's just garbage until then. It's just not worth it. So it's worthwhile. So what I'm doing here as well, guys, this is a tip for the newer traders. I always like to I want to make sure that my assessment of a chart is as neutral as possible. And I sometimes find that looking at it with a certain set of colors and indicators gives me an analysis. And then if I take all those off and break it apart and then look at it from a different angle, potentially I get a different analysis. But if I get the same analysis, then I know I'm on track. So that's part of the reason I'm sort of jumping between the two, because I want you to see when we do this, you're looking and you're seeing price action much more than you are anything else. And so here you can see that it's definitely got a bit of a level of resistance that is testing for support. You can see the downward sloping trend line. You can see the pressure building up and so on and so forth. And you can see this as well. You can see this happening. So all of these things actually make sense. It's quite bearish, but it's not a great trade. Then we have dollar Sing. Dollar Sing has managed to break through that. So we've got that weaker dollar coming in. We've broken through that. Again, we've got that downward sloping pressure, so it's heading lower. So yeah, there could be a trading opportunity here for any kind of pullbacks and any other continuations down. So dollar Sing would be a shorting opportunity on that one. So let's put dollar Sing on Wave Rider and see what's going on. There we go. So you've got it. You're just overextended. You need a pullback. Okay. Okay, they look good as in the direction. Let's do all the yen pairs very quickly. We know the danger, but let's talk about them. So yen pairs are having a weekly correction. So what I'll be looking for this week is, will we get a bullish candle this coming week, which means we'll see a turnaround here. So basically, I'm not seeing anything just yet that necessarily says there's a buy opportunity on this. What does it say on the Wave Rider? Let's go to the Wave Rider. Wave Riders, yeah, you see. So I would just really keep an eye on it because we could see a bit of a shift in that. The angle of the channel is important. This is a beautiful trend. The angle of dollar CAD is not very strong. So the angle implies how strong the trend is. Okay, so just a thought. You know, if the angle is, oh, that doesn't look great. But the angle says, you know, that's a strong trend, that's sideways ranging, that's a strong downtrend, you know, that's a weak trend, and so on. The angle says a lot. Read somewhere that the Bank of Japan decided to reduce its huge bond buying and scale back its balance sheet. So again, remember what their goal is. The goal is to strengthen the yen now to stop it from weakening. So that would be, so that's their goal. So when you say to me, how would this affect it? That would be their goal. The question is, will it work? That's kind of how I would do it. Okay, so let's go through all the yen pairs quickly and have a look at these. So you can see here they're all starting a bit of a retracement coming down. Remember that the dollar yen is really the main driver there, but these trends are strong. So I'm of two minds. I know I'm telling you that intervention is a risk, but I'm also saying I don't know when it's going to happen, when it's going to create the turn. And I think that yes, between now and then there could be one or two really good money-making opportunities. But the choice is, how much risk do you put on it? Make sure you have a stop loss in place, because if they do intervene, your stop loss is going to save your butt. So you absolutely wouldn't try anything crazy. Okay, so just look at these. They're all coming down on the weekly. As soon as you get a big correction like that, so have a look at that. All right, it might just be a weekly retracement, which means you don't get any Wave Rider setups on it anyway, because it changes the the pivot, changes the weekly pivot color, and it won't work anyway. But we would be getting a weekly retracement. But maybe it'll turn around this week, it'll go bullish again. And all of them are like that, pretty much. They're all great. They're some of the best trends we've had in absolute ages. And honestly, the trends are statistically the best way to make money. So possibly you would just go until it doesn't go anymore. Okay. Let's go through the Swissy pairs, guys. This is where the magic is right now. For those of you who've done my Spartan, how many guys and girls have done my Spartan program? How many of you have done it? No one. Okay, well, all right. I'm not going to give away any of the core stuff that we cover in that at this time. I'm not trying to be mean, but you know, a lot of people work for that, so that's fine. But basically, we've got some bullish divergence here. Got some bullish divergence, and we have started to really test levels of resistance. So we could very well see a change in trend on some of the Swissy pairs. It's more obvious on the other ones. We've got pound Swissy, which is very powerful, very strong at the moment. So let's go down here. Let's do Euro Swissy first. So Euro Swissy here is starting to look very, very bullish. So again, we've got that bullish divergence. change in trend. We've got the monthly actually effectively turning around. We're starting to look very, very bullish. And it becomes more obvious when we start to look at other pairs. Pound Swissy starting to break to the upside. So all the Swissy pairs are starting to break. So I'm using a little freebie pyramid trading app which scales in as you go. So you have a stop loss entry, but then it just scales in as you go. As long as the trend keeps going, it just adds like 4 positions or whatever. So you can see when you're just kind of just loading up on all the kind of positions there. A lot of them are the Swissy pairs, and HK is also looking positive. So that looks really, really good. All the Swissy pairs are basically on my watch list because they've all started to turn around. They're starting to slowly trend higher. So the Swissy pairs are not as strong trending as the yen pairs, but the Swissy pairs, just like the yen pairs, are offering buy opportunities in some ways. So the Swissy pairs should be on your watch list. Hold on, JPY charts. Great trends, but risk manage extra. Slash CHF charts should offer buys. Over the medium term, so in other words, over the coming months. Okay, over the coming months. I'll put this all into the chat group as we go. Oh, so mine is the price action masterclass, the Spartan price action masterclass. That's my program that I do, where it's just price action trading. It's good for day trading, but the knowledge, the analysis is transferable to the high time frames. Now, believe it or not, I was also coached by Julian back in the day, and Paul, and Chloe and I grew up together. So when I say that, in the trading world, we grew up together. So Chloe and I are brothers and sister on this program as well, and that's how we know Paul and we know Julian as well. But I have progressed towards pure price action trading. I'm just so much more technical. I have an interest in US politics since 2019 that I never had before. I'm not interested in politics, but I have learned a lot. And it's relevant because Ray Dalio teaches you how economics works. Ray Dalio will teach you how to really understand economics, and economics is tied to policies, which is tied to politics. So you've got politics producing policies, which can influence the economics, which influences your trading results. That's kind of how it goes. Okay, guys, so Swissy pairs looking nice. Some of them in various different stages, but overall they do look good. They're looking nice and bullish. So you go down to the daily. So what's happening here is I'm talking to you about the medium-term trend, but I know where it's going. I know that it's going to go up, which means now I'm just looking for those opportunities on the lower time frames. And so when we go to the Wave Rider, is this working for you guys, by the way? Are you enjoying the way that I'm doing the analysis here? Are you finding this useful? Because what I also want to do is I want to point you to a chart, tell you the direction, and then leave you to use the strategy to take the trade. But we know which way it's going. Does that make sense? Because remember, trading is kind of 3 parts. It's 2 parts, but the second part is divided in 2. So the first part is knowing which way the market is going. Where is its general direction? You don't have your entry yet, but you know where it wants to go. Your second part, which is divided into 2, is now looking for your entry and your stop loss and your take profit, waiting for that. And your second half of that is risk management, trader mindset, managing your trades, managing your risk, planning and stuff that. Okay, cool. So let's go back here. We were looking at Kiwi Swissy and Aussie Swissy. So we're looking at these pairs here. And I promise you this, that over time, it gets easier, because what happens is you start to be able to read the body language of the market with a lot more ease and confidence. You start to get less attached to losing trades because you definitely have more winning trades. So you become less emotionally invested in, because you know, if you just follow the rules, if you don't mess around, if you don't interfere in a bad way, moving your stop loss, changing risk, whatever, your ability to read the direction of the markets gets better. Your ability to identify signals from the price action get better. And you just know, okay, put my stop loss here. You learn where your stop loss works really well. You know that you need to be taking profits. You know that you need to not be emotional so that your mindset doesn't get triggered, and all kinds of things. And so what happens is all of that stuff just gets easier. It's less emotional and therefore less of a struggle. And it's not hard to read price action anymore. It gets much easier. And so it does become simpler and easier. It doesn't get easy, but it gets easier. Cool. So there we go. So the Swissy crosses are on my watch list. They're just, you just need those entries. Where was the last one? It was Kiwi Swissy. And there aren't any others that I think are really worthwhile. Look at this. So there we go. So we're kind of not on the moving average yet, but we've got our green signal. So we're waiting for it to start to take off. So now what I'm going to do is, again, the Wave Rider, you guys wouldn't necessarily know this, but the Wave Rider is honestly the best. I said this to my fiance. I said it's the best introductory strategy that you could use forever. Like, it could be your only strategy that you ever use, and it's the best one I've ever seen. And there's a reason why. Its filtering system with the weekly pivots and the channels is very good. It gives you very early signals that the market has changed trend. This is very early. We almost haven't even got that confirmed uptrend, and it's already telling you it's bullish. It's very good. So it really is like this in many ways. Should always, sorry, let me say this again and slowly. The Wave Rider should always be going in the background. You should always be taking Wave Rider trades. That should be your bread and butter. If you're going to try other strategies, try them on top of the Wave Rider stuff, but you should always be using the Wave Rider as your bread and butter. It's not a sales pitch. I'm being genuine. My trading style before, I had one before the Wave Rider, but now that I look at the Wave Rider, I wasn't using a weekly pivot or a channel or anything. I'm just using other stuff. This is good enough that you will be getting probably even more trades and getting better performance. It's very good. So the reason I'm telling you this is because we're going to talk about a trade idea here. I'm going to talk about a trade idea here that deviates from the Wave Rider a little bit. I am in principle bullish on all the Swissy pairs, but the Kiwi Swissy here is not here, which is where it should be in order to justify a trade setup. Arguably, guys, we have got a low and a high low. So price went up to here, came down to here. It broke up there. So you've got an uptrend, you've got a higher high here. So there's your uptrend there. And it came back. And so far, it's right here. It's still producing a high low. And there's a bullish candle here. So there is a possibility here that this is going to go up from here. You could put an entry above the high here and get taken in. Where would you put your stop loss? Well, you could put your stop loss here or here. Those are valid places to put your stop loss. It's not necessarily as efficient as the Wave Rider. That would be my end target at least. At least would be a big target, next level of support resistance. But that could be a legitimate trade idea. Alternatively, I could put an entry here and my stop loss here. The idea is that if the market turns around and goes up, I'm in the trade. I could do something crazy. I could put 0.5% on this trade idea. 0.5%, and put another 0.5% up here. So that if it does trigger and then goes down and stops me out, it's not ready yet, or it's not right, or I'm wrong about the general market direction. But if it does go up, I can also add in another % as it continues up. There's lots of little things. Okay. So the first thing we want to agree on is all the trade direction. Okay, so let's talk about crude oil, and let's move on, guys, because I'm conscious of the time. We've been going for 38 minutes. I'm going to wrap this up for you in the next like five minutes or whatever, 6-7 minutes anyway. It's quick. Crude oil. Crude oil has got the same problem. Same problem. Pointing to the same period. It's the dollar. It's the US dollar. Same problem. So you can Wave Rider it, but just be aware of that general thing. Be aware of it. It's weird. Basically, as you get older, the markets become simpler for you. You realize that there are certain cogs that move the systems. And a lot of people make a lot of money writing articles about how CPI data is going to do this and blah, 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 blah. But you know what? Actually, this is going to be fun. And I think I believe Paul and Julian would agree with me. If not, lots of my other colleagues. There's one thing that is generally, not every day, not all the time, but generally the single biggest mover of the stock markets and the currency markets. Do you guys know what it is? It's two words, but it's a thing. So I'm going to give you guys a few seconds to think about that, and then I'm going to tell you what it is. It's a fundamental thing. Not like supply and demand, it's two words. So, gold. What's going on with gold? Let's do our analysis here. So gold, this is really interesting. From a monthly perspective, gold is showing exhaustion. It's overextended, it's showing exhaustion. It broke through resistance, it's got a little bit of another little bit of a level here. Broke out, retested, broke out. It would be great for gold to do this, retest and carry on. It doesn't have to do that. It could come back to the moving average and carry on. It could come back to here. In fact, very good chance it'll do that and carry on. A little bit overextended, definitely showing some exhaustion. That's the monthly. So the monthly is saying, I'm exhausted, but there's still buyers, so I keep going. But if I did come back down and retrace and carry on, that would be acceptable. But the weekly is different. The weekly, ladies and gentlemen, is in a range. Don't know if you've seen this. Some of you have spotted it, some of you haven't, but it's range bound. It's range bound. And a range, in this case, is a consolidation. It's like, it's treading water. It's taking a bit of a breather. It's not swimming anymore. It's just like, I'm stopping for a bit. I just want to catch my breath and go. So consolidation could be leading to a breakout to the upside. It could be taking a breather instead of coming back down to here, which is where it would potentially come back down to. So I would expect it to come back down to this area and then continue up. But it could do a consolidation and keep going. It could. So what am I going to do? I'm going to wait for it to either break out the top or break out the bottom. If it breaks out the bottom, I expect it to just come back down to here and keep going. If it breaks out the top, then potentially it's going to keep going. But it is range bound. So it's interesting. From a monthly perspective, it's showing signs of exhaustion, showing that it might want to do a retracement and come down. But from a weekly perspective, it's saying, actually, I'm going to take a bit of a breather now and then maybe just keep going up. So that's my assessment on gold, is to keep an eye on it and maybe set an alert or have an order up here and a stop loss down there, or just keep an eye on it. But yeah, I would keep an eye on these levels. So specifically the level that I would probably watch would be 24.15. But it mustn't be a failed breakout. Could be a failed breakout, but it shouldn't be. Excuse me. Okay, I haven't seen any thoughts on what is the single biggest driver of the financial markets. And actually it ties into bond markets as well. I just realized. So it's currency markets, bond markets, and currency markets, bond markets. It'll impact the US dollar and the and stock markets. And it drives the markets much more than even the news, so day-to-day stuff. And what it does is it creates long-term trends, creates stuff. It'll impact the price of the dollar, which might impact the price of gold, but no, it's very interesting. So I'm just curious. You're not supposed to know this necessarily. Nobody really taught it, but it'll make sense to you once I tell you. In the same way that Julian's saying the bond market is the biggest market in the world, and you're like, really? But it is. Everybody's buying homes, guys. Everyone's buying mortgages, and bonds are tied to that as well as other stuff. So yeah, it is actually the biggest. You've got the bond market, then you've got the currency market, then the stock market, and so on. And then the futures market, then the stock market, and so on. All right, so let's have a quick look and wrap up the global indices. So gold, just exercise some caution there, guys. That's all I'm saying. So let's go back here. Let's clean this up. Let's do the indices. So we've got the Dow. What's happening with the Dow? The Dow is forming and it's going to break out next week. This is potentially a triangle breaking out. So you guys know my stuff. You'll know what this is. There's your potential breakout. I'd keep an eye on that. Could be a really good long opportunity here as well. How would we trade it? One way, entry above the high, stop loss below the low here if the next day goes higher. Alternatively, we're going to get a pullback and another attempt or a failed breakout. We'll get a few other things. Keep an eye on it. Okay, stop loss there or there or there or there or there and so on, and you get the point. So, but looking good. So very nice and bullish. Statistically, it should break out. It should be a successful breakout. Let's have a look. S&P 500, take a little bit of a breather, but the trend is strong. Not too worried about that for now. We've got NASDAQ so far pulled back. That could be a potential buy opportunity. So that would be a possible, okay, bullish signal over there. Entry above the high, stop loss below the low. It could be a wave rider. So let's have a look at NASDAQ, sorry, not that one. Let's have a look at NASDAQ on the Wave Rider. Let's see what happens. I'll tell you what the thing is at the end. I want to just finish up the charts. Just give me 5 more minutes. Sorry, guys. I'm sorry to take so long on this, but it is cool, though. You've got to admit, it's fun. All right, well, that is deciding what it wants to do. There we go. Okay, there we go. Oh, interesting. So look at that. It's gone red. Okay, so there could be a reason for this. I don't want to deviate from that. You could be having a situation like this. So be cautious then. So be cautious about that. Could be overextended, and therefore due for a correction. That could happen. So part of the reason we would put our entry above the high and the stop loss below the low is the next day has to keep going and has to go back up. Could happen. So exercise some caution in that, we'll see. But now it's gone green. So now it seems different. Okay. Was it the 4 hour? No, it was the daily. Daily's gone green again. Okay, well, there we go. There's your setup, guys. So that looks really good. So the indice is looking good. The UK, the FTSE is consolidating. This is a range at the moment, so that will likely break out to the upside. This is where the Wave Rider shines, usually. The Wave Rider will give you a signal within a range. So wait for that to go green again, and then you'll probably get your setup. But it's range bound. Does it need to calculate again? Because what's happening here, you can see it. There's your retracement, and there's your beautiful support level being created. And it's consolidating, and then it's going to go. Does that make sense, guys? Your retracement's going to take off. You've got sellers here and buyers here pushing it up, but it's going to break out and go. Let's have a look at the DAX. So the DAX is breaking out, it's going up, looks good, nice and bullish. EU also breaking up. This has got a resistance area up here I'd be a bit cautious about. Aussie looks amazing. So this is going to have a pullback. So any pullbacks here look good. 4 hours is going to be looking good. I'd be looking on the 4 hour because when these things move, they just move. They don't even touch sides again on the daily. You could wait 3 weeks for the daily to do a retracement, but the 4 hour will pull back. So you'll get setups in this area. Okay. Nikkei looks good. It's fine. Pulling back. That looks great. We've just had a bear market, and before that we had COVID. So we're at the early stages in the first third or quarter of the lifespan of the next bull market. We should have another 5 to 10 years of bull market. We'll have our weekly retracements. We'll have our monthly retracements. But we should generally continue to climb. We'll see. We'll see. Here is a trade this should be, no, I'm going to leave it as exclusive to my guys, but it's fine. But have a look at HK. Have a look at HK. This is a potential trade idea or trade market turning around. HK is looking good. It's turning around, basically. Okay. And then finally, let me talk to you about and China as well, also looking good, also looking very nice. So these are starting to look good. Let's bring them on. Let's look and see if it brings this up. So HK doesn't show here, but it's going to go green. It's going to go green soon. This will go green, and then you can look at that. So keep an eye on that. You'll get a green signal on it. How confident am I of that? Very. Okay, the weekly pivot will go green, and then you can take a buy on it. 75% confidence is the adult way to approach it. Okay, so in answer to the question as to what is the single biggest thing that drives all the markets, it is interest rates, central bank interest rates. Why is that the case? Well, when you have very low interest rates, then big institutions, hedge funds, all kinds of big companies can borrow money at 0 to no interest rates, especially like when there's COVID, stimulation money, ridiculous, because then they can borrow the money and usually they don't even have to pay it back. It just gets forgiven. They throw it into the stock market, they buy stocks, everybody else is doing it, it grows up, then they either pay it back. So when the interest rates go up, so when there's a fear of inflation, central bank increases the interest rates, they take their money out. They take it out and they either pay it off or have it written off, and they've made money for nothing. Because they'll borrow 100 million or 200 million or 500 million. The company doesn't need it, but they can use their money. It's free money. It's basically free money. It's your bank saying to you, we're going to give you, if you apply, we'll guarantee, we'll lend you $1 million. And then you're like, okay. And you might not even have to pay it back. And it'll only be like 1% interest. It's ridiculous. So that's what happens in the stock market. it also impacts the bond market. Interest rates impact the bond market. And interest rates, central bank interest rates, if you haven't heard of a carry trade, you need to look it up. So different countries around the world have different interest rates, central bank interest rates. You might have 4.5 in Japan, 4.5 in Australia, and 0% central bank interest rates in Japan. So people are borrowing from Japan and lending to Australia. So there's an interest rate differential. And what that does is it creates a flow. It creates a flow. So in other words, it creates a flow of money, people borrowing Japanese yen and selling Australian dollar, for example. Now, prior to 2007, 2009, the differences between central banks around the world was massive. You would have 5 or 6 or 7% from some G7, G9 countries, and 1 or 2 or 0% or 0.5% from other G7 countries. And so you'd borrow one, and they were called carry trades. And the people who did that were actually the big banks. And if the trend also goes in your favor, then you make extra money. It was like a no-brainer. But post 2016 and everything, post 2012 actually, all of the central banks around the world were lowering the interest rates close to zero. That was their problem. They kept lowering the interest rate, lowering them to stimulate the economies, which meant that the carry trade died, because they're not going to do it if you borrow at 0.5% interest here and you have to sell at 1.5 interest. It's not worth their while. It's not worth their while because they've got all these other costs and overheads and carries. They want a big gap of like 4 to 5% difference. But now those gaps are starting to widen again between the different central banks. And so that drives the currency markets and carry trades. And then the last one was the dollar, because the dollar's interest rate as well strengthens, the central bank interest rates also strengthen or weaken the currency. So if you have a higher interest rate, it tends to strengthen the currency, and it can do that. So the US right now has a weaker dollar. It's lower, but they don't need to increase it because they're getting inflation under control. So the next thing I want to remember, and this stuff is gold that you guys don't necessarily know, that you might not necessarily know this, but raising the interest rate serves one primary purpose, and it's to cool inflation. That's it. So in other words, when they talk about how the banks in the US are going to raise interest rates, the answer to that question is inflation out of control or is it under control? If it's under control, they're not going to do it. It's just that simple. And if it's out of control, they probably will do it. Okay, and that's it. And when the economy is struggling, then they'll drop the interest rates. And that's just how simple it is. So no matter what these pundits on TV will tell you, it really is actually that simple. But I recommend that you do that. So on that note, ladies and gentlemen, let's recap. In terms of currencies, some of the dollar pairs look really good. Weaker dollar looking good. We've got some of the yen pairs look amazing, but we've got that fear of intervention. So risk manage that correctly. The Swissy pairs look good for buys. Gold is giving mixed signals, to be cautious. Crude oil is not really offering anything really amazing. The indices are looking really good for buys. They look really good, waiting for those retracements. That's it, guys. That's a full run across the markets. I'm going to leave you with this. I'm going to just write it up here and just give you the indices. I'm going to give you the summary into this. Indices look good for buys. Gold, cautious. Crude oil, range bound in its own way. I think that was it. I think those are the ones. Okay, so these are the ones that I'm looking at. There we go, ladies and gents. I'm going to wrap this up, but that is very much today. I want to say thank you very much. I hope you found this instructive and useful. And again, I look forward to seeing you guys and whenever we either do this again or if I see you on any of the live events. But yeah, again, absolute pleasure. Thank you for chatting with me and doing this, and enjoy the rest of your evening. My day's starting. I'm going for brunch now. It's almost 11 a.m. on my side, and we have a decent day.